this topic, how we can merge the two worlds together, I'd like to introduce our moderator. That's Mr. Antene Alemayehu. I really wanted to make sure I got that properly done. He is the Chief Technology Officer from Enad Bank, and he's an experienced IT professional who's worked throughout the banking and actually the retail industry. He's currently working as Chief Technology Officer in Enad Bank, and he has a whole breadth of, let's say, experience and skills in data center design, administration and management, IT infra, computing design, solution architecture, you name it. It seems to be that he's done it on the IT side. So I'd love to welcome you to the virtual stage, Mr. Antene, and I hope you can introduce our wonderful and esteemed panelists to close off the day and to answer this topic. Thank you very much. Welcome.
Okay, thank you, Cornel. Can you hear me right? All right, so thank you for having us, and it's also my pleasure to be here with you for this power panel discussion and sharing our interesting ideas and for the audiences and for each other as well. So thank you all panelists for being here, for coming, for attending. So we have four panelists now. So we have Mr. Adewale Salami. Correct me if I misspell your name. A Chief Technology Officer of First Bank of Nigeria Limited, and Mr. Adewale has over 19 years of experience working in the BFSI and currently working as in the First Bank as the Chief Technology Officer with the responsibility of building a bank using technology. You also have Mr. Isaac Kamuta, Group Head of Payment Services, Cash Management and Client Access at EcoBank Transactional. Mr. Isaac is the Global Head of EcoBank for payment, cash and management, spanning to up to 34 countries. And Mr. Isaac has 27 years of experience in the banking industry. We also have Mr. Eje Amora, Director of Communications from Apollo Fintech. Mr. Mora has 30 years of experience in PR experience in marketing and brand building from various industries. We also have, last but not least, we also have Mr. Dorte Lazarus, Director of Information System Department from Banco BI. Mr. Dorothy has more than 16 years of experience in the IT and financial services. I think we have quite a group here. So thank you all for being here.
Thank you.
The topic of our panel discussion is financial inclusion and mobile banking, and what possibilities are there out now. So without further ado, we can start with the session. I will be forwarding my questions to Mr. Adewale Salami. My first question. Currently, the rise of digital wallets is currently accelerating, and also it's part of the solution to a cashless society. So, what's your take in this topic? So you can share it.
Thank you, Anthony. And I'm glad to be on this as a panelist. And good afternoon to all my other colleagues that are over there. Good afternoon, and all the people that are watching us online. So the first question, yes, digital wallets has actually been trying to foster more cashless environment. We've seen the presentation from the earlier presenter from Ghana. We've seen how MTN Momo has done compared to all the other, even to the traditional channels. We've seen it and it's actually been significant. Same thing, we have the same example in Kenya, and we're getting more and more African countries. Locally here in Nigeria, yes, we've tried to see some sort of a headwind to that one, but the impact is still not that significant in Nigeria. The impact is still not that significant in Nigeria. Nigeria is still largely cash-based economy. And unfortunately, most of the fintech play in that place, the same market that's actually being targeted by the banks. These are the same market they're actually targeting there. So it's the progress has not gone that far really in Nigeria, but elsewhere we've seen significant progress in there. I want to say maybe there are a lot of things that are contributing to that, but especially in Ghana, but for Nigeria, people are still doing cash out. For example, even the e-Naira that is actually out there now, because of the way that you still need a bank account to fund the e-Naira, we're still targeting the same set of people, even though the e-Naira has an opportunity that you can actually fund it from, even without the bank account, but you still have to have some sort of a relationship with the bank. So which means that we're still addressing the same set of customers that will be. So we have that problem in Nigeria because of that, and maybe part of regulatory framework, part of the way we still do that one. But elsewhere is actually going very well. Significant progress has actually been achieved in Ghana in less than 10 years. In fact, in just about 5 years, they've actually achieved so much significant progress in there. Kenya has actually been a model country and elsewhere in Africa. So yes, it is contributing to much more cashless society, but in Nigeria, the progress has been very slow. The impact is actually not that significantly felt because the current solution that we have in Nigeria and the current environment makes it to be addressing the same set of customers that the banks have already acquired. Thank you.
Thank you, Mr. Salami. Maybe I can forward this question also to Mr. AJ. So, what's your take in this as well? Since your company is also currently running digital currency, digital wallet. So, what's your take in this especially?
Well, thank you very much for having me. It's a pleasure to be with all of you. Absolutely. As we see the progression towards a cashless society, the digital wallets are going to play a massive role in that. And of course, various financial tech companies are going to have a number of different solutions. One of the things that Apollo Fintech has identified is the main barriers that keep a large group of people from being able to participate in everyday banking transactions and services. And so our number one goal is to provide accessibility and usability through our platform in a number of different ways. I know there's a few other questions coming in regards to the banked, the underbanked and unbanked regions of the world. And I'd like to address some of those in just a moment, especially our central bank digital currency, which allows for regions of the world who've been disenfranchised by accessibility to cellular data and internet, et cetera, to be able to actually transact through some of our platform products like our SMS capacity, et cetera. But yes, I mean, digital wallets have become the revolution that is leading a cashless society. And so APL Fintech with its scalable platform has definitely thought ahead about some of those barriers and what are some of the things that we can do. It is definitely going to play the role as the world continues to adapt to the digital wallet realities. But yeah, for now, those are my thoughts about the fact that digital wallets will continue to be a major role in the inclusion of the goal for a cashless society. And again, I can't overemphasize accessibility and usability has got to be the key. And Apollo platform, the Apollo Fintech platform has definitely set itself up to provide those solutions to those barriers and some of those problems.
Thank you, Mr. Moa. Mr. Lazaro, so and your comments as well in this area.
Okay, good afternoon to all. Thank you for the invite from Finnovex and to my colleagues on the panel. A good session ahead. So from our standpoint, so I represent Angola. So Angola is a fairly green, I would say green, still to develop on the financial inclusion set. We have technologies in place and wallets in place from around 8 years now. The society is still a lot cash based, so we have to. It's not a problem of technology. Maybe it's a problem of the go-to-market strategy and agents on the ground to make people understand the value that these mechanisms or these wallets have. We are seeing since last year, the central bank regulated the mobile kind of wallets and money, and we assume that the next 3 years we're gonna have a rise on the services and fintechs that are operating on the market. Okay, so but the wallets themselves by themselves, they will not be enough. So we have to be embedded into business processes, into other ecosystems, in order to make the wallets gain their value. Okay, so that's also a key element that we have to work on, is the partnerships that can drive the wallet business and the digital inclusion to work. Okay, by themselves, the wallets they will do just enough. So a good strategy to go to market, not forgetting that we are still a cash-based society, so cash will still be operating for some time. We also have literacy and kind of we have to strengthen the ecosystem, the financial ecosystem, so that people understand that the money is secure, that they don't have fraudulent activities and stuff like that. So we have a lot to do, but definitely will be the way to go on financial services. The fintechs and the mobile operators are coming now with the regulation that just came out last year, and we are very enthusiastic about the future.
Okay. Thank you, Mr. Lazaro, for your kindly inputs. Mr. Isaac Muta, so what's also your take in this, especially in the rise of digital wallet and having a cash-based society and the future of building a cashless society, especially from experience in the cash and the payment services area?
Okay, thanks, for the question, and again, also appreciate my fellow panelists and viewers. I will answer that question of the rise of digital wallets and their, how it's helping sort of drive cashless society from a slightly different perspective. I think when you look at cash in the society, there has always been this drive to cashless. We want to digitize cash because we know that cash causes problems. So when you look at the problems that are brought by cash, it's expensive to manage cash. If you take any average country, and I like what my fellow panelist, Mr. Salami, was talking about Nigeria, where I'm also seated, by the way. I run the payments business for EcoBank, for the group out of here, Nigeria. But when you look at the costs that's associated with, associated with cash, it's huge. Think of the cash in transit vehicles that you meet on the streets, the policemen escorting them. The cash has to be warehoused. Cash is a dead asset. When it's sitting in a vault, it's earning nobody anything. So when you look at all the cash intensive economies, and you actually sit down and compute how much is this cash costing us, it's huge. The numbers are huge. So when you look at it from that perspective and say, this is a huge expense that we'd like to remove from society, it then begins to highlight, several things. So then you also look at efficiency and convenience. When you talk about what digital wallets are doing, they are bringing in efficiency. Instead of having to carry pounds of cash, having to go to banking halls, withdraw it, go to ATMs, digital wallets just make it very easy, and therefore it brings in efficiency, it brings in convenience, which again, these are all very, very fundamental things. And then the last one is risk. We all know that the risk associated with cash, people have lost lives. We've heard of the big heists in airports as cash is moved around. It's a huge, huge problem. And especially when you talk about in Africa, where sometimes we have got unstable, some countries that are still having, issues of instability. If you have cash sitting in a banking hall in a particular area and you have a security challenge, that cash gets into the wrong hands. So there's a lot of risk associated with it. And so you can then understand when, as digital wallets begin rising, whether it is central bank driven like the e-Naira, the ECD, and all the other E's that will come in, it becomes a very, very interesting thing and to be able to focus on. And then when you look at the impact it can have, because traditionally there was all these barriers to entry where people needed to have a bank account for you to be able to actually, participate in the banking ecosystem. But now with digital wallets that are built around mobile, which everybody now has gotten, all of a sudden you are realizing that you can remove all these things, expense, efficiency, risk, by actually using these digital wallets. So on our side as EcoBank, I think that was one of the first products that we launched, where you can go on the phone and actually open a digital wallet. We call it Express Account. That is opened just on your phone, and you can do that across the 3 countries in Africa using one instant. And I think when you look at it from that perspective, you then realize the power that it brings. And so I see digital wallets really, really being pivotal to us being able to reach more and more people, especially when you start using mobile devices that almost everybody, every average adult now has got access to. So, that's my perspective. Thank you very much.
Thank you. I couldn't agree more, because as you have said, cashless society is the way to go, especially when it comes to security, especially having carrying around cash, especially in the African countries where some things are not stable. And the same is true as well here in our country. I'm based in Ethiopia, so the government couldn't actually manage the liquidity of the banks, especially the central bank. It was a very difficult job to manage the liquidity because of the those who are working or who are using cash-based payments, and also in order they cannot also have a control of the transactions and see which are the genuine transactions, which are not the genuine ones. So that's why our government also has pushed a 5-year strategic plan in order to implement a digital platform, so that where most of the things, especially cash-based society, has to be cash-like societies. So that's the way to go. Definitely, digital wallets are playing also a very significant role in this. So moving to the next question. So I'm going to forward it to you, Mr. Kamut, as well. What do you think of the access of financial inclusion, especially the role of fintechs in reaching the unbanked society?
Yeah, thanks also for that question. I love fintechs because I've been amazed at what fintechs can do and how they can be able to solve problems, and especially when you start talking about partnerships with financial institutions, partnerships with government, partnerships with anyone. And I'm sure my colleague here from Apollo Fintech will maybe do a lot of justice to to that question as well. But I think when you look at the fintechs and accelerating financial inclusion, I think the first question that one asks is, who are these financially excluded? I think that's the first question. Where are they? Because you need to know where they are. We talk about a huge number. I think in Nigeria here, I hear of numbers like 40 to 50 million being floated around. Mr. Salami maybe would have even better data than me in terms of how many people are considered excluded. But you hear very big numbers being toted around. And the first thing is, where are they? And then the second question you need to ask is, what are they doing? Because it's not like they're sitting there, mourning that they are not included, right? They are busy going on with their economic activity. And just to give you a perspective, in Africa, it's estimated, I think I was looking at a McKinsey report that was being shared, that we have got around 85 to 95 million medium and small enterprises. Those are people that employ between 1 to 10, individuals. And you can really, those are really individuals trading, doing their small businesses. They are not registered. They don't have a name. They're just individuals, me like you, going around their own business. So a lot of those 85 to 95 million micro enterprises, they actually can consider them to be excluded because they are not visible in the banking sector. So you have to ask, where are they and what are they doing today? How are they going around their business? I think the third question is, how are they doing it? Because it's not that they have got no means. They have got a way today that they're actually going around doing their business. There may be friction, there may be challenges, but there's a way they are doing it. And the fourth question is, then you need to ask is, what problems exist? What problems exist there in that space? When you start asking those questions, then you then say, how do I solve that problem? Can that problem be solved with technology? Can you go in for a specific segment, for example, the transport sector, organize them, and then leverage technology to be able to solve that problem? So I think when you look at fintechs coming in to play a specific area, deploying technology to solve a specific problem, and once you solve that problem, the banking side, the payment side almost, sort of fits in very, very, very well. And that's when you start talking about partnerships, and it becomes very exciting because at the end of the day, it is the problems that we have in Africa that we want to solve, and we need to solve them. So whether the fintechs play a part, the banks play another part, the central banks play another part, for example, by enabling digital currencies and giving us, the rails to start building solutions around that, is fantastic. So that's just my take. Let me pause there. I'm sure the other panelists would want to respond to that question as well. Thank you.
Very good.
Okay, thank you. Very excellent point of view from this side. So I will direct this to also Mr. Moa. So with your experience in the fintech industry, so what do you say about this?
Thank you very much. Great discussion so far. I appreciate it. So, in preparation for this panel today, I was doing a little research and I came across a very interesting article that will actually address some of my colleagues' observations just a moment ago. It was from JP Morgan Chase, and I'll just read a quick blurb for you because it gives us some actual data. Having a bank account is a privilege. Over 1.7 billion world citizens are excluded from the benefits and entitlements provided by access to a bank account. Almost 2 billion people have no access to affordable financial products addressing their specific needs. And almost 2 billion people have no way to make payments other than cash. Convenient savings mechanisms and no access to fair credit or insurance. This egregious social failure can and must be eradicated. And I think that's part of our discussion here today, is trying to figure out how we can address not only, as my colleague said, some of the regions and where they are, but the fact that there are so many and the world is continuing to evolve. How do we include as many people as possible, especially those that have been disenfranchised by financial services and products that rely so heavily on data service, internet, et cetera? Well, one of the things that APL Fintech has done is created some very world use case products that have the expandable, scalable possibilities for all of the foreseen and even some of the unforeseen things that could come. It's one of the advantages of APL Fintech's structure. Its platform is very scalable. But in regards to acknowledging the billions of people that do not have financial services to participate more efficiently in a cashless society, we have come up with two main products that I'd like to address today. The first one is KnoxWire, which is going to technically replace the swifting system by allowing it to be a lot easier for people to transact and settle cross-border payments, et cetera, in virtual seconds as opposed to 3 to 5 business days with very reduced fees. It is an incredible product that we're very excited about in its launch, Knox WorldWire. And the other one is, of course, the central bank digital currency, which is also a part of how we've addressed the second barrier of usability. This allows for the unbanked and underbanked to participate with the cashless revolution. It legitimizes their trades and access to their accounts via a very great part of our platform, which is, like I mentioned, an SMS protocol that anyone with just a $3 phone will be able to have access to their finances, be able to manage them, account for them, et cetera. And so between our central bank digital currency and the avenues that it has for not only institutions, government institutions, for various financial products at a government level, also a commercial protocol and part of its structure, so that we even offer what we call cash card, cash vouchers, just a number of different tools and resources that really do address the major disenfranchising of so many for basic financial inclusion. And so I think, once again, there's a lot of financial tech companies out there. Fintech has become a very popular thing in our society because of the revolution in financial change and the progression of what's happening. I think the key here is financial tech companies who can provide solid, secure, usable, and accessible products. Making a brick and mortar point of headquarters for people to be able to come in and do those kinds of things is a good step in the right direction. And a lot of fintech companies have done that. But being able to not have to travel to a place or have to use cellular data or the internet is one of the goals, I think, in fintech these days, to try to make things accessible and usable. And APL Fintech is trying to revolutionize and take the lead in that aspect.
Thank you, Mr. Moa, for sharing your experience in the fintech industry. Mr. Salami, so what can you add to us on this topic?
Okay, thank you, Anthony. I think both Isaac and AJ Moral actually said it all. And I will cite some local examples here that are actually working well. Local examples in Nigeria that are actually working well. I think what is actually working well here in Nigeria is that how fintech is actually being able to crack this on their own is by using the term called embedded finance, embedded banking, embedded financial services. And I will give an example. The banks cannot be everywhere. Relationship managers of banks cannot be everywhere. But the fintech belongs to a community, and when they do go to that community and they discover some gap, they'll be able to do that one. Let me cite two examples. One of the best activity here in Nigeria is lottery and betting. Lottery and betting, we have lots of people that does lottery and betting, from the person inside the street that doesn't have a bank account, to people that do have bank account, from the medium to the low end. In fact, most of the people that does betting here in Nigeria, they're the low end kidder, and those betting companies, they do have that there. By integrating digital wallets into betting, the fintechs have been able to corner those people into the banking system. Initially, they can actually start using the digital wallets as part of the banking, for the betting purposes. Later, they can realize, oh, with this wallet, I can use it to buy airtime. Oh, with this wallet, I can actually use it to pay for other bills. With this wallet, somebody can actually transfer money to me with this wallet. So this is a very good example, and it is actually working well in Nigeria. Another one that is also working well, which I call embedded finance. In the local community, we have some sort of cooperative. We call it a susu or ajo in the local community, where some set of people will gather themselves together as a cooperative, either as a farming cooperative or either as a trading cooperative. They will gather themselves together and said, oh, for our own interest, let us be contributing money, either and maybe have access to loan. So fintech has actually been able to use it to provide a platform driven by the wallet, by the digital wallet, which is also attached to their phone. And by the time that they see that their loans are actually being disbursed into this, and also their contributions are actually, their financial contributions are actually being recorded, and they are getting alerts on their mobile phone, which actually gives them well. You can't believe in the local community, they still rely on the coordinator of the cooperative to know how much they've contributed, when are they due, when is this next due, whether the contribution is actually being remitted to the appropriate government. So fintech has actually been able to use this embedded finance and financial system to actually reach deep down into where locations, into locations and groups of where bankers and the banking system do not have access to. Thank you.
Thank you for your experience. Mr. Lazaro, so if you could also share us your experience, especially in the country where you're residing in Angola, what's the experience there with the fintechs and the unbanked society?
Okay, so Angola is thriving with a lot of activity on techs and fintechs. They are creating a lot of traction in their business and really creating opportunity to grow. Okay, we as a bank, we understand that, and we actually will enhance their possibilities to create and grow. We are not that to compete with finances, as Mr. Isaac told. We are there to create more security on the system as itself and enable the growth of those fintechs. As Mr. Adewale told, so we believe in embedded finance, and that's what we are working on to provide, for example, wallet as a service. So KYC and enhance KYC to onboarding clients on those fintechs, and actually creating the back office so that the fintechs can operate with more security. Also, another thing that is very important is interoperability within the system, so that you don't create silos on each wallet and each system. So that's also a great feature that we are working with the central bank and all the operators in Angola regionally. And we believe that all those, for example, Mr. Adele also talked about microcredits on the community. So we have that we call Kishikila, and we are creating a product that will actually create a better user experience on the way that this Kishikila is done, and not creating all the manual controls that that exist today, and actually create more revenue and more traction within that kind of business. So fintechs have a great path to grow. We are there to support them and to actually keep the market safe as a bank and as a financial institution working with the central bank and regulators.
Thank you. I couldn't agree more, because usually the banks giving the convenient banking solution, financial solutions, cannot reach everyone, especially those the unbanked. So it's definitely a good idea to work with the fintech companies so that they can reach into the unbanked society and then build towards to a cashless society. So my next question will be on how is this the growth of the fintechs and the financial inclusion in digital wallets emerging will impact the use of the customers on the regular everyday banking applications. So Mr. Lazao, if you answer this.
So the fintechs will impact on the way that we have to be more lean in our processes and our user experience. So we have a lot of regulation on top of us that we have to address, and we have to be more agile, as everyone says in the industry and the market. Our user experience team, for example, and services team and product team are innovating at a scale that we never been innovating for the past years, and we will keep going. Fintechs will always be one step ahead because they have more flexibility, they have less regulation, and we have to understand that. Okay, so we as a bank have to understand that they have to be able to work on a secure environment, and we have to provide that environment as a financial kind of ecosystem. One thing that is also very important is the trust. So the trust, we actually, when we talk about financial institution and digital wallets, we are talking about carrying the cash, physical cash that people hold in their hands to somewhere they don't understand, more or less. So we have to create a lot of trust so that all these fintechs and banks can operate securely. So this is one of the key elements that we can bring on to the table and let the fintechs work and create businesses, and we'll be there embedded to support their business.
Yeah.
Thank you. Mr. Moa, anything to add for this?
Yeah, no, I appreciate my colleague's comments. One of the things that he said is trust. I believe that while we're working on digital wallets and innovation towards these revolutions in financial realities, I imagine there'll still be digital mattresses, right? People hiding their precious cash somewhere. But I think that trust is an absolute factor in this. As the mass adoption goals continue, these digital wallets, these different financial tech platforms and contributions to these efforts have to win the trust of the people for their hardworking money, banked or unbanked, honestly. I've always said innovation without practical application is a bad situation. And I think that there's a lot of really good, innovative ideas out there, but the ones that are accessible, usable, and have those trust factors of security around them is what's going to make the centralized banks be more open to these efforts and even partner with financial tech companies. This is why Knox World Wire is so important to our platform, because we recognize the SWIFT system has already it's got antiquity to it in regards to how quickly the financial systems in the world are moving. And so being able to reduce a SWIFT payment in a traditional sense using Knox World Wire for less fees in a minimal amount of time, I mean, those are things that are attractive to banks and institutions, financial institutions, and obviously their clients. And so, again, I just think innovation has to have real practical application. And I think that's going to also change the way we see the current use of bank applications. I think more and more of the financial tech contribution is going to be applied to our current mobile applications for banking as they are at this point.
Thank you. I think we are also having a little bit time left. So let's mark this the current question and the next question, and maybe I can forward it to Mr. Salami and Isaac consecutively. So you can tell us how the impact of these services in the everyday banking applications, and also how do you see of the banks partnering with fintech companies with digital wallets in order to overcome these disruptions? So, Mr. Salam.
Okay, thank you. Yes, both questions are quite related, and I will take it together. The impact, yes, we are seeing the impact. One good thing for the digital wallet is that digital wallet is actually embedded into the customer's lifestyle. Because it is embedded into the customer's lifestyle, customers will want to go in there, and because those financial services are being provided over there, they are more likely to do it over there. So they will progressively see less and less use of everyday banking app. I know some banking apps are coming up as a super app so that they can actually weed that one off, but there's no way we'll be able to. Let me give you an example. The Facebook, money stuff that were actually coming in there. So if I'm in a Facebook and I wanted to buy Facebook as a marketplace, I wanted to buy something from a marketplace, do I need to leave Facebook? And normally, ideally, you leave Facebook to your banking app. But with what Facebook is actually integrating now, the wallet system that they are already integrating now, you really did not need that. You just needed that one for that one and move on. So we see more or less and less use of everyday banking app now. Banks are fighting back. They're fighting back by creating some sort of a super app, by trying to be in stuff, and that's actually by also partnering with digital wallet provider, fintech digital wallet provider to overcome these disruptions. That disruption is clearly on the horizon. We already seen it. It's already happening. And then, yes, there's no way for us to other than to do the partnership. And there are ways in which we do the partnership. For example, in our own case in Nigeria, where we know that the cash is still the king, the cash is still there. We're not yet fully cashless, and we're not yet fully progressing there. Those digital wallet needs some sort of a cash in, cash out, and they sort of the deposit and deposit into the wallet and no zone. So they need bank, so they will actually come to the bank for that one. Second example is that even banks now, to make it easier for fintech, they are now providing this wallet system as a white label to fintechs. So this is one of the partnerships that's coming. My bank provides that currently. We have the First Money wallet. We actually do white labeling of it for fintechs. So if you have if a fintech actually has a specific need to do that, they will actually we can white label for them so that we'll be able to through our own partnership program for us to be able to do that one. So there are other part of it. Some sort of the back area, the settlement part of it, the reconciliation part of it, they still need bank for that one, so that we'll be able to do that one. So what banks are doing, we're doing more of it, and there's no way. We just have to get these people into our own ecosystem so that we can actually ride on together in this particular aspect. Thank you. Well, let me give my other colleagues opportunity to contribute to it. Thank you.
Yeah, thanks, Mr. Salami, for that. I'll take it out from there. And I think you've answered it and basically covered it well. I think people go to banking apps, not because they love apps, but they go there because of what they're going to do. That's what takes them there. So if I can do what what I need to do inside Facebook, as Mr. Salami has said, and I can make my payment from there, I can pay my bill, I can pay my tax, I can pay from wherever. They don't need to log off and go into start making another interface with the bank just for the sake of doing that. So consumers and users just focus on, I want to do something, which is the easiest, the most convenient way to do it. And so as banks, we've realized that, and I think getting super apps is one way of trying to do that. Everybody's trying to make sure that you can remain relevant to your customers, and I think the pressure will just continue growing. Going into the second question around, will we see more partnerships? Absolutely, yes. I think the idea around wide-leveled, wallet solutions is key. And I think one of the things I would like to mention here is that as more and more fintechs embrace wallets, also the realities of managing a wallet will start coming home, because the regulators also are there to protect consumers. And there's a lot of fraud that is happening on some of these, wallets. Regulators get concerned, and immediately you start seeing them putting on all the regulatory requirements that have been put on banks also coming into these wallets, because the moment consumers get defrauded, immediately they raise alarm to the government. They expect the government to take action. And I think as more and more fintechs become big, the realization of the cost of keeping a sound financial system begins to come, to roost. And I think that's where now partnership become very important, because banks have got this. It's a well-oiled machine. We understand risk management. It's in our DNA. Part of it is because of regulation. We understand compliance. We understand patterns. And we have invested over the years with systems and technology to be able to provide a robust financial system. So as more and more fintechs come head on with the realities of actually running a proper business, and also the realities of not just running a business and saying you're getting volumes, but also now beginning to print profits, because shareholders don't want to hear about the volumes that you are doing. They start saying, are you making money? Are you generating returns? So pricing becomes an issue. The cost of compliance, the cost of risk management, the cost of reconciliation, as Mr. Salami has mentioned, all these things come into reality. When they come home, you see the fintech sort of begin to say, you know what, I better outsource this to a bank that can be able to do for me the risk management, the fraud monitoring, so that I focus on providing the technology that my customers want. So again, the realities are actually forcing some of these partnerships, and I think whether it's wide level solutions or in response to that is all coming home. And I think also as we do in EcoBank, we work with some of these fintech, providing them Pan-African wallet solutions that enable them to access the 33 countries in one go. These are all solutions that are there, again, based on the realities of running a business, risk management, controls, reconciliation, and a desire to be able to print profit. Thank you.
All right. Thank you. It's definitely quite an information to take. Definitely the same is true here in our country. We have the telecom company starting its own wallet, so that with the already existing customers that they have, they're integrating their wallets into the existing banks, so that the fintech companies has the reachability, and the banks has the just like what Isaac said, the rest of it, the management of the risk management, and also the cash management, and all the things as well. So definitely it's a very good point in order to the banks partnering with digital wallet companies. So my next question is to Mr. Mora. So earlier that you mentioned that the key thing is, especially in digital wallets, is the trust of the customers. So in order for to gain the trust of the customers. So one point or one alternative is bringing loyalty points on the customers when they're doing alternative payment using their mobile wallets. So how do you see this, the integration of these loyalty points with digital wallet services?
Loyalty points and reward incentives to build trust with participants and growing the use of digital wallets is absolutely a wonderful idea. I think strategically it helps build the trust. There seems to be, when you provide these kinds of things, other small partnerships that gain credibility because of the use of the wallet, being awarded certain rewards with other commercially established and credible businesses and other partnerships, helps the wallets have a little bit more credibility. It draws in a little bit more attention. So yeah, loyalty points, reward systems, those are all, I think, good incentives to help the digital wallet revolution become more mass adopted. Just a quick point, as the gentleman was speaking about the bank's trust and partnerships, I don't want to get away from this question too much, but I recognize that banks will in fact be almost inevitably connected and partnered with financial tech companies, because financial tech companies are going to continue to provide centralized banking products and systems that are going to make it easier for their own banking clients to participate. So with APL Fintech, we do have a white label system as well, and for commercial banks. And we also have set it up in such a way where it works with governments and other more national payment, cross-border payment systems, et cetera. So between the loyalty points, the revolution of the digital wallets, the partnership with financial tech companies and centralized banks around the world, meeting the real needs of the disenfranchised and the financial revolution, these are all just the things that are going to take us to the next milestone and the next milestone. I'll just end very briefly. I have a special place in Africa. In 2009, I was able to visit Sudan, Southern Sudan, Africa, with the mission group that I participated with. And so I seen firsthand the realities of some of the disenfranchisement in every way, shape, or form in that experience. But having been there and seeing the faithfulness of the people, seeing the desire to work hard and just be able to manage some of the basic things that we all are so privileged to have access to, is an incentive on a personal level. And I know that Steve McCullough, our leader, he's an incredible visionary. And one of the things that he has done specifically is make this entire APL Fintech platform very scalable and thinking ahead to some of these other needs. And for that, I think, once again, the innovation is important to have that practical application for things to be accessible and easily usable, et cetera. And I think we're on to a great time in history right now to be alive and to be a part of these things. So thank you again for your time and for allowing me to share a little bit about our platform. And it's a real pleasure to hear from all of you and to see the excitement of what I think is coming next. It's going to be good for everyone.
All right. Thank you, Mr. Moa, for your kindly insightful informations that you shared with us. I hope everybody has a good take of the situations. So since we are almost running out of time, you can also answer the questions, the last question, and also give us a summary of points that you would like to address, so that we can wrap up the session. So let's start with Mr. Ladaru, and we can go on with Ms. Salami and Mr. Salami and Mr. Isaac.
Okay. So yes, bringing on new features, new payments to one's shop is the ultimate goal. Okay, so you want to have the most features possible within the ecosystem and within the reach of a human touch. So as more features you bring on, such as loyalties, remittances, payments of yourself and of others, products of yourself and others, that will be that is one of the key aspects of building a good product, a good ecosystem product. Banco Bay, being the top bank in Angola, has a big mission to drive financial inclusion. So we have partnerships with the local governments, with UNICEF, through our apps. We have actually 2 wallets, okay, designed for different purposes, and we actually work very hard to drive financial inclusion, to bring people into the system, to create value for our customers, for our partners, and that's what drives us. So we need to take let our job to make our job so that the people that or the place that we live in is a little bit better when we go away. So that said, thank you for the session, and we'll be here available.
Mr. Salami.
Okay, Anthony and the team at Finnovex, thank you very much. My parting word is that there's still, especially for the fintechs and also for the banks that are collaborating together, there's still a lot of problems to be solved in the world. One good opportunity that the fintechs are giving us is that they can take each one of these problems because of their affinity and the closeness to the community. They can take each one of these problems and take it and use technology to solve it for the people. They really do not need more a big investment like a bank does, but with a partnership with the bank, they can actually get a result. And let me give you an example on this loyalty. Loyalty has not actually picked up in Nigeria. Reason is because, one, we have not achieved the network effect. That's number one. Two, we have limited options for redeeming loyalty points. For example, maybe ShopRite now, you have a card for a loyalty point for ShopRite. We have another one for games. You have another one for all these ones. So by the time you look at it, you have several loyalty cards, and you will not be sure, and you can only redeem it in each of their shop. But a fintech has come up and said, no, let's put the loyalty point in the wallet. And with this wallet, they've actually given it to them. One good one is that customers have options. They have several avenues to redeem those loyalty points, not necessarily where they actually got it from. Two, they don't need to actually have several loyalty cards, whether digital or physical, and they have to be bringing them up or down, since all of them are now tied into one wallet. That's one good way in which to quickly reach the massive and the network, the mass points for us to be able to. So it's one good thing which fintech is having. You don't need to make an investment in infrastructure. You don't need to have all the big money for licensing and all those stuff. But with just a little applications of what you have, with the support, with the partnership with the bank, and what your community is actually doing, you can solve a lot of problems. My advice to them is just take the problem one at a time. Don't solve all the big problems. Don't look at the very big problem, but you can actually solve the problem at the micro level and then scale it up. Thank you very much for this opportunity, and I'm glad to be part of it. Thank you.
Thank you, Mr. Salman. Mr. Isaac.
Yeah, thank you as well. Before I just give my closing remarks, I would add onto this discussion on loyalty points. If you look at where loyalty points have succeeded in the current, previously, I think a very good example is in the airline industry. They were able to use loyalty points very well. Now, and also in a bit of it in shopping, if you go to the more developed markets where there's a big supermarket shopping experience. There it has also taken root. And if you analyze those two industries, you'll find that the loyalty points really come in when the service being rendered becomes a commodity. When there's very little differentiation. If I'm walking into a ShopRite to buy goods, or I walk into a Checkers, or I walk into a Woolworths in South Africa, it's the same product being sold by three parties. The question is, what makes me go into a Checkers as opposed to go to a ShopRite? It's going to be, you need to incentivize me to be able to come to your shop because it's a commodity. Same price, same everything. There's no differentiation. They're all good, world class, good service, everything. And if you go to the airline industry, it's the same thing. I need to get on a ticket and fly to the UK. All airlines are safe. They will land. They have the same probability of leaving Lagos and arriving in Heathrow. So if I'm going to decide whether I go to Virgin or I go to Air France or I go to this, you need to now tell me what will bring me there. So you need to bring me in. You need to give me something for me to come to you because it's a commodity. So the loyalty points always follow the maturity of when it becomes a commodity. So, again, I've just tried to pack that up there because when in an environment, for example, like Salami is saying in Nigeria, there are not many big supermarkets here. So even if you wanted to incentivize me, for me to be able to go to ShopRite, it is 10 kilometers away from where I am. Now I'm going to drive all that way just to go and earn 2 points. The fuel I spend, everything is not worth it. So that loyalty industry can't take off here until you have got commoditized products and services. So maybe if the financial services industry becomes commoditized and there's no differentiation, you then now have to give customers something to bring them in to be able to have the experience. So again, really want to thank you. It's been really a great honor to be part of this discussion. I love the idea around fintechs. As you know, EcoBank, was established by entrepreneurs to try to, remove borders in banking in Africa, so that if you want to do banking in 34 countries, the EcoBank is supposed to help you remove that border and just feel as if it's one country. And we remain very committed to that, and especially helping fintechs scale up and be able to take advantage of the opportunities that exist in Africa very quickly without having to go looking for that 3 banking licenses, that 3 countries. That's actually what we do. So I'm really very much honored, to be part of this conversation. And I do hope that we shall continue to connect, the rest of my colleagues. Salami, we're in the same city, and the rest of you. Really, really a great honor. And happy FinTech, we are here. Thank you.
Thank you.
All right. Thank you for your kindly insightful points and ideas and views. So personally, I have a lot of information to take in, and I've learned a lot actually. I hope this is the same for all the panelists and audiences as well. It's a really good opportunity for us in order to discuss such solutions and such futuristic and what's currently happening and how it's happening in different environments as well. So thank you also Finnovex for organizing this session, and it's very insightful, and thank you for having us. Back to you, Mr. Kone.
Anthony, thank you very much. And I haven't spoken for a bit, as you can tell, so I need to clear my throat there. And to all our panelists, thanks very much for your insights. I hope you will do me the honor. So before you all go into the networking lounge, which has opened up, I hope I can pose a question to you all, because this is a very interesting topic, and I'm going to be selfish and ask one. So and it's actually on the back of a comment that was made in the live chat by Funke Oluwayemi, which I think it's an interesting one. So as we look at, prices have basically been squeezed and squeezed and squeezed in terms of what we can actually price to a consumer. So transaction fees have been reduced time and time again over the last 18 months. And what that leaves it when you don't have price, and I think that was a very nice observation that you had, Isaac, in terms of, the airline, right? Eventually you have the same kind of ticket. In the comment, it says, a major factor for the unbanked's hesitation to be banked is basically the lack of trust in the financial industry. And what's interesting is that when I hear a lot of bankers, and I've worked in the financial services space for a few years now, everybody seems to say people trust us. And yet there's this large portion, Mr. Mora, you said it's, about 2 billion according to the stats, right? That aren't banked and don't want to be necessarily. So maybe a broad question, but are we actually trusted? And if not, what do we think is the best way to get that trust back? I know it's a very broad question and a very big one to close off on, but if you could just go through and maybe give us
I'll add just a couple of words to that, because Colin, I think you're right. I think trust, I think in any business and in any industry, the success of anyone has to be surrounded with trust. And for us at Apollo Fintech, we want to try to provide solid services that we partner with solid, credible institutions that want to make a difference. I think the underlining factor for us is a genuine desire to improve the world. And we try to put that in our forward facing in every way that we can, because we know how important trust is. I don't think that the 2+ billion people who are unbanked are necessarily unbanked out of full lack of trust. I think a lot of it has to do with some of the practical things we discussed today and their inaccessibilities and the usability of various products that we're all talking about trying to champion and see as part of the future. However, I do believe, and even those of us who are banked, I mean, I don't trust my bank very much sometimes, it's just the reality of the unfortunate corruption that surrounds the world, the realities of inflation, and just all of the financial barriers that exist, whether you're banked or unbanked. But I think at the end of the day, I think you nailed the question in of itself revolves around, we just need to do better at building real trust. And I think the only way that happens is by trying to provide solid products and trying to partner with solid institutions who care about what they're doing for humanity.
Thanks very much for that. I think it's a very broad topic. I'm not sure if anybody would like to have any parting words on that. I see you're all muted. Duarte?
No. So the bank system is basically trust. Okay, so we do two things. We bring trust to the market. That's the first one. And the second one, our business is money. Okay, so we do business on people's money. So we have to enhance trust. Okay, it's not that the people don't trust the banks. The banks hold their savings. So we have to enhance that. We have to bring regulations on. And we have to create an ecosystem, an environment that all the players work in a trust way, okay? So if banks are not there, for example, maybe that's a big problem for fintechs because of fraud, because of KYC. So I don't assume that the customers not being banked is because of trust. I assume that some of the literacy around financial services have to increase, but I don't think that banks are not trusted. I just think that we have to work better on the customer service, and if you have a good service, then it's all suited. Okay.
Yeah, maybe I would add to that, and I would start by saying that when the word trust is mentioned, I think you need to start first and ask, what do the citizens trust? Do they trust the banks or they trust the banking system? And I think I would be able to say, I think the citizens trust the banking system, not necessarily banks in their own as a standalone unit. You get my point. And the reason why they trust the banking system is because it's heavily regulated. The government has got their eyes on it. They watch banks. They every day there's a new regulation. They watch the capital. They ensure that we are taking care of citizens, the resources, the assets that have been entrusted to banks, the government through the regulators, either the central banks or all the other regulators. The government watches over it because they understand if there's a problem in the banking system, it will very quickly filter into the society, and you can have a big economic problem. So the citizens do trust the banking system, but the banking system comprises of banks, and banks. It is difficult to run a bank. The capital required, when we talk about all these regulations and whatever, requires a lot of capital to be able to run banks. And when you deploy capital, you do need to get returns. And the returns is based on the capital that has been deployed. If today you had maybe, for example, banks are printing 70% return on capital, then there would be a problem. But when you look at actually the returns that banks are making on capital, it is still within the normal the normal amounts like other fintechs and other companies are making. It's not that banks are printing 50% returns on capital, but when the citizens hear, oh, a bank made a billion profit, the word billion, whichever currency that you use, will stick out in the minds of the ordinary citizen. They'll say, you're making billions and I'm only having thousands in you, and you're making billions. But what they don't understand, or what is not projected, is for you to make a billion, you have also invested trillions, in terms of capital, in terms of this to set up the banks, and you've got all these regulations to be able to to make. So I think there's there's a little bit of just interpretation and the words and the trends, and of course it's always good to have somebody to beat around. And I think banks will always be beaten around by politicians and everyone, whether it's in the US, wherever they go, and it's because of that word billions, without people asking, you're making billions, but how much actually did you put in there for you to be able to make those billions? So I'm not trying to defend the banks, but I think banks are very good citizens. We pay tax, we comply, we do everything we can. And most important, we are partnering with fintechs to drive financial inclusion and make this place a better, make our countries better. Thank you.
I like that. Thick skin and open arms, basically, right? It's a good way of approaching it.
Can I add to that?
Please.
Okay, let me just quickly add to that. Yes, we've been talking about trust, but the banks are not the only one in the exclusive preserve of that particular trust. Things are actually changing. Yes, the financial system, you can trust that one, but the trust in the bank that we're all banding about is just between me and you, the middle class and the upper class and all those stuffs. I can tell you now that it is only the middle class and the upper class that can still bandy the word trust before I can actually bank with you. I know you have offices and all those ones. But the lower end of the ladder, they actually trust the next guy close to them, the person that they know their father, that they know their mother, that's offered them services, and that they can actually go to them. This is one of the major reasons why the agency banking is actually very successful in Nigeria. First Bank has actually been running the agency banking all around, all through the country. And they know, because the guy agents, this is the same guy that they know the father of, and they know the son of, or the daughter of whom he is, and then they also know their house. They know that they can entrust their money to them. So on the micro scale, the trusts are actually shifting to the fintechs. One big popular industry in Nigeria is betting. Nobody, I still say it, has been able to displace Baba Jebu. Baba Jebu is one of the foremost betting agents here in Nigeria. And the reason why Baba Jebu is very good now, that everybody does it, is that he focuses on the lower end of the betting system, not on the Vegas casino style and all those ones. And he recruits the main guy, the people that are very local into the environment, whom they know. And that's why Baba Jebu has actually been very successful. So trust now is not on the only exclusive preserve of the banks. Fintechs now, they are purposely now setting up their business for them to be able to win the trust. But I know in Nigeria, almost all fintechs, because they want to scale quickly, they will rather focus on the bank customers, target their product on the bank customers, rather than target their product on the non-banking customers first. But it's just, the thing is actually shifting. So it all depends on which segment of the customers are you before you can actually try to trust the bank. We've seen banks that have failed before. We've seen copious example of people's money that are actually still trapped in the banks up to today. So it's actually shifted in between of where you are. The key thing is that the whole of the financial system itself, just as mentioned by Isaac, must actually be well solid, and then people can actually trust the system itself. We have one example recently. We have one example recently of a fintech where maybe there's a system issues on it, and their customers couldn't actually find their money, their agents couldn't find their merchants, couldn't find their money in their wallet. They shouted, by the time everybody came out, the government actually have to intervene and to allay them that their money is actually intact, and they sorted it out about 2 or 3 days later. So trust is now, is part of get building trust or get attending customers trust is now part of product design, which fintechs and banks, they are all doing. They have put it as part of their customer experience so that they can actually do the selling. Thank you very much.
Well, thank you very much as well for the insight, and to everybody. It's always an interesting topic, and I know it's one that that can ruffle a few feathers because it's such an important foundational element of the entire industry, right? And it comes up time and time again. But I think banking's been around for a while, so I do expect that, to Isaac's point, the banking system will continue to be in place and valued. Let's see how the rest of it shapes up over time. It's lasted a few hundred years, if not a few thousand, so I think it'll be okay in the long run. But let's see what shape it takes up. To all the panelists, thank you very much for your participation. To our moderator, Mr. Anthony, thank you very much for moderating the session. This is a wrap-up for the day. So I hope to everybody that's joined, to my wonderful panelists who are there, Mr. Mora, Mr. Lazaro, Mr. Kamuta, Mr. Salami, and of course, Mr. Alemayehu. I hope that if we have any questions, we can connect with you. You'll still be available on the platform or on LinkedIn.